Hi everyone, welcome to Tuesday, which of course we take a look at the performance of the NZSX 50 over the past week. Now, like normal, this is just education purposes only. It's certainly not intended to be financial advice, any stretch of the imagination. It's just to give you an idea as to the things that I'm looking for when investing in the New Zealand market. And of course, if you too are wanting to perhaps get trading signals and things, by all means, come along, join me. I have a 30-day free trial where each week I send out if there's any new trade opportunities from what I research. Of course, this is just for you to do your own research on. It's just narrowing it down the opportunities. And I also change any stop losses that I have. So to me, stop losses are very, very important because they help protect my capital. And for me, it also means that I don't need to make that decision as to whether I should be selling a share, excuse me, or holding it because, hey, has it run too far or is there further to go? Who knows? I never try to pick that. I just rely on my trading stops. So I'd love for you to come and join me and see what you think. So let's jump across and have a look at the NZSX 50. Right, so as you can see here, like I just said, I've got the main board for the NZSX 50 up on the screen, and it is showing that we have got a little bit of a positive week last week. I'm recording this on Monday morning, so the market is about to open. So it's already showing that it's about 0.41% up already for today's opening. Whether that continues, who knows? But as you can see, we're clearly, and I've spoken about this for some weeks now, clearly in a sideways band. Okay, we've sort of got a top round here of just over that 12,100 point level, and we've got a bottom at around that 11,600, and we're just moving sideways. To me, you can see that just by looking at the graph. We've got a bit more volume happening over these last couple of weeks, which can be a good sign, especially with the market closing up, which is something that we want to look at. Looking down here at the MACD, it's not a trading platform or signal that I use a lot of. I just want to basically make sure that what I'm seeing on the main screen is also being reflected in the MACD, and we're not having a bit of a divergence. But it could look like, it's trading these moving averages on the MACD. They've got very close. There's very little sort of volume down here, and it is, on the whole, in my view, in a trending downward position. Now, speaking of that, I'm going to put an indicator on. I'm going to put the moving average on, and I'm going to make it an exponential, but I'm going to change the tune to 200. So that'll make it a 200 week. And the reason I've just done that is that it's a very, very slow moving average, and it can be a great way just to get an overall direction of the market as to perhaps where it's trending. So 2 years ago, it obviously opened a lot. It hasn't given me, I can't quite get it on here, but you can see here that it is trading. I've run across, it is trading above where it opened 2 years ago. So it's 11,400 at the moment. Brings it up for me. No, it doesn't. 12 months ago. So we are trending a little bit higher, which is a good thing. If the market was below this moving averages, that's definitely a warning sign. I'm just going to go and change that now to the 30-week exponential moving average. And this is why I'm not looking for any more trades at this stage or opportunities. And that's because this candle, whilst it did close slightly above, it's not a clear definition that the market is in an uptrend. So for me, it's about riding these shares that I've already got, sticking with them, making sure my stop losses are in place. Because when I go through and review that each week, there are a handful of shares that are performing very, very well with my trading signals. And in fact, some of them are up a substantial amount, which is obviously what we want whenever we're trading. However, because the main board is not in a decisive area, and it's a little bit the same for most markets. You're finding that for the US and also the Australian market. There's a few core shares which are performing strongly, and for the US especially, that is what's driving their market. However, in New Zealand here again, we've got a few strong shares. They're certainly not the dominant force of this market, and this is why we've got a sideways pattern happening here, or sideways movement in our shares. So that means for me, keep riding those shares that are doing really well, but I'm not looking to open any new positions, not until we start to see this a little bit more positive. I'm also going to just put that moving average and make it a 15 week moving average. And again, an exponential. So you can see here with putting that 15 week on, again, the market is below that one. It's marginally above the 30. But when I look, you can see that these moving averages are getting very, very close together. The gap's narrowing, which could mean that especially the 15 week, it responds a lot quicker than the 30 week. It could be that the market could be starting to have a little bit of a downtrend simply because they're narrowing, and it's looking like that 15 week potentially going to cross through the 30 week. And again, that would definitely be a negative sign for the New Zealand main board. So I'll stop sharing. I hope that's helped. I hope this education that I'm giving you is helping. If there is anything further that you would like to know or would like me to share with you, I'm happy to do so. So leave me a comment and I'll see what I can do and see if I can help. So until then, enjoy your week. Oh, don't forget to come back on Thursday. We're going to do share and review, which is Goodman Property Trust. So I think hopefully you'll find that quite interesting. So until then, have a great day.